Crypto is a competition in which the majority lose while only a small minority win big. So this begs the question of how to become one of the winners. Well, while luck certainly plays a role in the answer, there are things you can do to increase your chances of winning. So today we're going to give you a step-by-step guide that will tell you exactly how to do this so that you can be one of the few who wins big. This is a video you cannot afford to miss. Okay, I'll start by saying that nothing in this video is financial advice. It's purely educational content that's meant to increase your knowledge of the crypto market and how it works. I'll also note that this video is inspired by a video done by Alex Becker, where he rightly explained crypto as being one big PvP game. We'll leave a link to that video in the description if you're interested. And that said, I want to expand on what Alex explained in that video. Basically, the crypto market is not like other markets, like for instance the stock market. This is mainly because of liquidity, which can be simply understood as the amount of money in the market. Except for BTC and a few large altcoins, crypto is not all that liquid. In practical terms, this means that the actual values of cryptos you see on websites like CoinMarketCap are much lower than they appear. In other words, you wouldn't actually be able to sell, say, all of the Doge in existence for billions of dollars. You'd be lucky to get a few $100 million, if that. Now, if you don't understand why, here's an example. So, imagine I created a new cryptocurrency called Guy with Hat that had a supply of 1 billion. Now imagine that our CEO, Nick, bought one Guy with Hat for $1. Now, on paper, this would give Guy with Hat a price of $1 and a market cap of $1 billion. In practice, though, if I were to try and sell a few of the Guy with Hat tokens I hold, its price and market cap would quickly fall to zero. Believe it or not, but this is the dynamic that most cryptos have, albeit to varying degrees. Notably, this means that the first people to sell are the ones who make all the money. And everyone else, the ones who blindly bought, will often end up with nothing. Sorry, Nick. In all seriousness, the way that Alex describes this dynamic is everyone putting their money in a pot, watching that pot of money grow, and then watching a few people take most of the money out of the pot and run, leaving everyone else with next to nothing. This is what investing in most altcoins is like. The trade-off is that altcoins can offer much larger returns than almost any other asset class. It's common for an altcoin to 10x over a few weeks or months, and there have been hundreds of instances of it happening in a matter of days. If you manage to be one of the first ones out, you walk away a winner. And by the end of this video, you'll have all the information you need to do just that. And if you stick around until the very end, we'll tell you the method that will guarantee your victory. And by the way, if you're enjoying the video so far, be sure to smash that like button, subscribe to the channel, and ping that notification bell so you don't miss the next one. Now, the first step to winning in crypto is to pick the right crypto exchange. Specifically, you want an exchange that's listed the kinds of altcoins that I mentioned a few moments ago. As it so happens, the Coin Bureau Deals page has the biggest deals and sign-up bonuses on these kinds of exchanges. Specifically, it's got trading fee discounts of up to 60% and sign-up bonuses of up to $60,000. These deals are only available to Coin Bureau viewers and they won't be around forever, so take advantage of them before they disappear using the link in the description. Now, the second step to winning in crypto is to pick the right altcoins. As Alex also pointed out in his video, narrative is the most important part of picking an altcoin. If you watched our video about crypto narratives for the next bull market, you'll know these include AI, Deepin, GameFi, and DeSo. In plain English, you want to pick an altcoin that has a selling point that anyone can understand, especially retail investors. That's because these are the people who are going to put most of the money into the pot. Now, if you're not sure what a narrative that retail investors could understand is, here's an example: decentralized streaming. One of the top performing altcoins of the last crypto bull market was a decentralized streaming crypto called Theta. It pulled more than a 200x from bottom to top. By contrast, here's an example of a narrative that the average retail investor will not understand: modular blockchains. Although modular cryptos like Celestia's TIA have rallied a lot recently, it's unlikely that the average retail investor will understand what they are to the point that they ape in. And you can find more about Celestia in the description, by the way. I digress. Now, in addition to narrative, the right altcoin will have a low price tag and a small market cap. The low price tag will give retail investors the false impression that they could become billionaires if it becomes as big as BTC, while the small market cap will create the kind of volatility that can result in massive profits. For context, small cap cryptocurrencies have market caps of less than $100 million. Medium cap cryptocurrencies have market caps of between $100 million and $1 billion, and large cap cryptocurrencies have market caps of more than $1 billion. Now, never forget that it's the market cap that determines how much a crypto can moon. A smaller market cap means that it can rally much more and much faster. The catch, though, is a smaller market cap means that it can crash just as fast, which underscores the importance of doing your research. Now, if you don't have the time to do your own research, then why not become a member of the Coin Bureau Club? Every week, we cover small cap altcoins that were voted on by our members. We also show you which cryptos we hold and which ones we're watching. And we even give you daily crypto market updates, including technical analysis too. Better yet, we've created an exclusive members Discord where we discuss the next big narratives and answer your questions. You can become a member of the Coin Bureau Club using the link in the description. Now, the third step to winning in crypto is to understand your time horizon. The crypto market follows a 4-year cycle that's believed to be driven by the Bitcoin halving. The first 1 to 2 years consist of a bull market, and the remaining 2 to 3 years consist of a bear market, depending on your definitions. In any case, the fact that the Bitcoin halving is here means that we're about to enter the parabolic phase of the crypto bull market, which could last anywhere between 12 and 18 months. During this period, we're likely to see extreme volatility, BTC and altcoins pumping and dumping by large double digits. However, the overall price trend will continue to the upside. That's the nature of the bull market. The caveat, though, is that some crypto narratives will pump sooner and others will pump later. If you see that cryptos in a certain narrative are already starting to go parabolic, you have 2 options. The first is to look for other small cap cryptos in that narrative that haven't yet rallied. That's because there's a good chance they'll catch up to the rest of the pack eventually. This, obviously, requires some research. The second option also requires some research, and that's to turn your focus to other narratives that could explode. Obviously, it's impossible to know for sure which narrative will explode or when, but as a rule of thumb, every single crypto will rally eventually during a bull market. The only questions are when and by how much. Given that we are currently in a crypto bull market, the more important question, therefore, is how much? And this ties into the 4th step to winning in crypto, and that's to set realistic price targets for the altcoins that you've picked. This is certainly easier said than done because you need to factor in both price and market cap. The price, because that's what retail investors see, and the market cap, because that's the limiting factor. For example, if a crypto has a price of, say, 20 cents and it starts to rally, chances are that $1 is the price target that most retail investors will be watching. That's because it's a psychologically significant level. In this case, therefore, there are 2 possibilities. This target will be front-run or purposely pushed higher. Put differently, crypto traders will start selling at around, say, 80 or 90 cents, or crypto whales will push the price above $1, causing everyone who sold too early to FOMO back in at the worst possible time. If you look at the all-time highs of most cryptos, you'll notice they tend to be over or under a psychological level. Now, suppose that our hypothetical 20-cent crypto has a market cap of $200 million. Besides the fact that a $1 billion market cap is also a psychologically significant level, it also means that it's going to be much harder for it to pump in percentage terms. It's going to need ever more capital in order to rally. This highlights a question that you constantly need to ask yourself when you see a crypto's market cap growing bigger. Where is the additional capital going to come from? Typically, the answer is from another exchange listing, which tends to give a big boost to price in both the short term and long term. If the crypto in question has already been listed on every major exchange, however, then it's safe to assume that most of the additional investment has already arrived. This means that you can focus more on price than market cap for these kinds of cryptos when it comes to assessing targets. Pro tip: learn to do technical analysis. This can come in handy when you're trying to get a sense of how much higher a crypto could go in the short term, as well as how much it could fall if it sees a correction. And we'll leave a link to our first technical analysis tutorial in the description for your convenience. Now, this relates to the fifth step to winning in crypto, and that is taking profits. Now, we know from experience that this is very difficult to do, especially when you start to believe in the narrative your crypto belongs to. It helps to remind yourself that you're not here to get married to an idea, you're here to make money. Of course, when you take profits and how much you take depends on your risk tolerance and financial situation. If you have a low risk tolerance and a fluid financial situation, you may want to take more profits more frequently. Conversely, if you have a high risk tolerance and a solid financial situation, you can consider playing the game a bit longer. Whatever you decide to do, you want to make sure that it keeps your emotions in check. Watching your portfolio go up and down by thousands of dollars per day can be an emotional roller coaster. The result can be irrational buying and selling that completely undermines your game plan and your future gains. So, if you're feeling FOMO, then consider increasing your crypto allocation if it'll calm you down. The trick is to focus on allocating to promising crypto projects that haven't pumped yet, ideally those that are similar to the one that's causing you to feel the FOMO. On the flip side, meanwhile, if you're feeling FUD, then consider decreasing your crypto allocation if it'll calm you down. The trick is to focus on reducing allocations in cryptos that have larger market caps and have rallied the most, while not selling the cryptos that have been lagging at a loss. It goes without saying that this is easier said than done, particularly when you're holding a crypto that's pumping or dumping a lot more than you expected. This is something many of us at the Coin Bureau have experienced, and this is the profit-taking method we've used to mitigate the psychological effects. If a crypto unexpectedly doubles, take out half to recoup your initial investment. Then sell half again if that crypto hits its all-time high or goes up by 10x, whichever is first. After that, let the rest run until the broader crypto market is in its mania phase. Sell half if your price target isn't met. Sell all if it is. On the other hand, if a crypto unexpectedly crashes, then figure out why and assess how much lower it could go. If the cause of the crash is something temporary, then consider increasing your exposure. If the cause of the crash is something permanent and it looks like it could go a lot lower, then consider selling. Note that this assumes the rest of the crypto market is rallying, and it's also easier to do with technical analysis. Now, the final step to winning in crypto is to repeat this process so long as the bull market is around. You'll recall that we could have between 12 and 18 months of volatility to the upside ahead of us. This means there will be lots of opportunities to win. Just remember, though, that you can't win them all and you will lose some. Even so, the processes we've outlined should be sufficient to secure significant victories. To recap, start by making accounts on crypto exchanges that support lots of altcoins. Next, find altcoins on those exchanges that fall under a narrative that the average retail investor could understand and ape into. Then, choose the altcoins in these narratives with the smallest market caps and ask yourself how much time is left for them to rally. After that, set a realistic target for how high these altcoins could go, factoring in additional inflows that could come from additional exchange listings, if any. Most importantly, take profits along the way and allow yourself to FOMO in and FUD out of cryptos if it helps you stay rational. Accept that you can't catch them all, but understand that even if you catch just a few, you can walk away a winner, something most people who invest in crypto won't be doing. Now, to wrap things up, we want to reveal the method that will guarantee your victory in crypto. In short, don't be a player, become a part of the game. This means working in crypto, ideally in a position where you can profit from all the other people who are playing the game without actually playing against them. That is very important. Now, this can mean working for a crypto project, working for a crypto exchange, and yes, even working as a YouTuber to educate others about how this game is played. The thing about this method is that it takes a lot of work to secure a victory, and it's a victory that you must continue to work at in order to keep. Not only that, but it also involves making an investment of time, which, depending on your circumstances, is worth more than any money you'd ever spend on altcoins. Winning in crypto with this method takes years, and it will take years for you to notice that you're winning. I'm speaking from experience here. However, the silver lining to this approach to winning in crypto is that it has meaning. Even though many crypto projects have zero fundamentals, a lot of them do. The boom and bust cycles of the market eventually reveal which ones have real potential, and some of these projects will literally change the world. Similarly, many crypto exchanges are on the cutting edge of financial markets. They are the bridge between the new technologies that crypto is developing and their traditional equivalents. Many exchanges also invest heavily into up-and-coming crypto projects, unlocking even more innovation and change. And as for us YouTubers, well, there's no denying that we have got plenty to keep us busy when it comes to providing quality crypto education. The growth of the Coin Bureau over the years is proof that quality crypto education is what people crave, and we hope that it inspires others to create even more of it. So, with a bit of luck, the combination of crypto projects with actual utility, the innovation of crypto exchanges, and quality crypto education will eventually be enough to transform the crypto market into something that looks less like a PvP game and more like a proper asset class that people respect. From our perspective, it looks like the crypto market is headed in that direction. And this provides a truly life-changing opportunity for those who are looking to get involved and become a part of this evolution, not just invest in it for short-term gains that will probably be spent on stupid stuff in the end. So, if you know a thing or two about crypto, then consider making the most of this bull market by becoming a part of the game, not just being a player. This opportunity only comes around once every 4 years, and there's no guarantee that the cycles we've seen in the past will continue into the future. There is, in other words, no time like the present. And we'll leave a link to our video about how to find a job in crypto in the description if you need it. And that's all for today's video, so if you found it helpful, smash that like button to let us know. If you want to continue getting helpful crypto content, subscribe to the channel and ping that notification bell. And if you want to help others get better at the game of crypto, be sure to share this video with them. Go on, don't keep it all to yourself. As always, thank you so much for watching, and we'll see you in the next one. This is Guy, signing off.